Gold and silver just sent an alert signal, market crash. Incoming. What I'm about to show you, it's happened only twice in recorded history. 1979, and right now, every time this pattern appeared, absolute catastrophe followed. The housing market, frozen solid, about to shatter. Bitcoin, facing its worst nightmare in 15 years. The stock market, down 50% when measured in real money. But here's what terrifies me most. The indicator flashing red right now, it's predicting something comparable to the Great Depression, and I've saved the most disturbing discovery for the very end of this episode. Welcome to Currency Archive. You know, after decades in this game, I've learned something. The truth doesn't care about your portfolio. It doesn't care about your retirement plan. It just arrives. And right now, it's knocking loudly. If you value straight talk over sugar-coated nonsense, hit that subscribe button. Do it now, because what we're covering today, most channels won't touch it. And tell me, where are you watching from? New York, Mumbai, London, Tokyo? Drop your city in the comments. I want to know who else is paying attention. While the world sleeps through the alarm bells, there's something happening in the gold market right now that most people are missing. Something that only appears before the absolute worst economic disasters in modern history. And it's flashing red. Gold just surged over 38% in a single year. Now, at first glance, that might seem like fantastic news for anyone holding gold, but here's what the experts know and what they're not saying on mainstream financial news. Every single time this indicator has appeared, catastrophe followed. Not a small recession, not a minor market correction. Catastrophe. Think back to the 1970s. Stagflation was crushing the economy. People couldn't afford basic groceries. Gas lines stretched for blocks. The dollar was collapsing. Gold was screaming warnings then too. And very few people listened. Then came 2008, the financial meltdown. Lehman Brothers collapsed. Banks were failing. People lost their homes, their savings, their entire futures. And guess what? Gold had been sending signals for months before it all came crashing down. The pattern is unmistakable. It's mathematical. It's historical. And it's happening again right now. Macro strategists, the ones who actually understand how these economic systems work, they're saying something terrifying. The recession might have already started. We just don't know it yet. The data takes months to catch up with reality. By the time the official numbers confirm it, millions of people will have already lost everything. They're predicting unemployment hits 7.5% in the United States by the end of this year. That's not a small number. That's millions of families suddenly without income, without hope, without options. But here's the truly frightening part. The Federal Reserve, the institution that's supposed to save us during economic disasters, they've used up their entire toolkit. The ammunition is gone. Interest rates are already low. Quantitative easing has been pushed to its limits. There's nothing left in the emergency box. Some analysts are whispering about something nobody wants to say out loud. We might be staring down something comparable to the Great Depression. Not similar, comparable. So why is gold the canary in the coal mine? What's it telling us that the polished news anchors and smiling financial advisors won't admit? Last year, 2025. Gold posted a massive 65% gain. Let that sink in for a moment. That's the best performance since 1979, 46 years, nearly half a century. Think about what was happening in 1979. Inflation was completely out of control. Trust in government was collapsing. The dollar was in free fall. People were desperate, angry, scared. Sound familiar? Investors today aren't just buying gold, they're running toward it. They're literally sprinting away from paper currencies. They don't trust central banks anymore. They don't trust governments to maintain the value of fiat money. And honestly, can you blame them? Look at what's been printed in the last few years. Trillions of dollars created out of thin air. Money that didn't exist suddenly flooding the system. Anyone with half a brain knows that can't end well. And the forecast? It gets even wilder. Analysts are now projecting gold reaches $9,000 per ounce by 2028. $9,000. Read that again. We're not talking about a small increase. We're talking about a complete transformation of the monetary landscape. This is the dawn of a long-term bull market for real assets, for tangible things, for physical wealth you can actually hold in your hands. The era of cheap money is dying. The era of infinite quantitative easing is dying. The fantasy that we can print prosperity forever, it's dying right in front of us. For decades, governments told everyone the same lie. Just trust us. Just keep spending. Just keep borrowing. Everything will be fine. But gold doesn't lie. Gold doesn't play politics. Gold doesn't care about election cycles or public relations campaigns. Gold is honest, brutally honest. And right now, gold is screaming one simple message. The bill is coming due. The decades of financial engineering, of currency manipulation, of pretending debt doesn't matter, It all comes with a price, and that price is about to be paid. But gold isn't the only asset sending warning signals. The foundation of American wealth, the cornerstone of middle-class prosperity, is starting to crack wide open. We need to talk about real estate. Picture this: an entire market worth trillions of dollars, completely frozen, not moving, not breathing, just standing still like a corpse that hasn't realized it's dead yet. That's the American housing market right now. Analysts have given it a name that should terrify anyone who owns property. They're calling it a zombie market. Dead, but still walking around. And zombies, as everyone knows, eventually collapse. Last year showed the worst results since 2011. Growth has essentially stopped. The machine that's been driving American wealth for generations, it's seized up. The gears aren't turning anymore. And here's what nobody's talking about on the evening news. For the first time in 15 years, we're about to see actual price declines. Not slowdowns, not corrections. Real drops, significant drops. Experts are calling for an 8 to 10% crash in home values through 2026. Now, some people might think that doesn't sound too bad. Just 8 to 10%, right? Wrong. Let's do the math together. The median home price in America is around $400,000. A 10% drop means $40,000 vanished. Gone. Just erased from your net worth. For most families, that's an entire year's salary disappeared overnight. But it gets worse, much worse. Here's the mechanism that's about to trigger this collapse. Mass layoffs are coming. Companies are already announcing cuts. Tech firms, financial institutions, manufacturing plants. The pink slips are being printed right now. When people lose their jobs, they need cash to survive. They need to pay for food, medicine, basic necessities. And where does that cash come from when the paychecks stop? They're forced to sell their homes. Imagine tens of thousands, maybe hundreds of thousands of families all trying to sell at the same time. All desperate, all competing for the same small pool of buyers. Supply floods the market like a broken dam. And when supply overwhelms demand, prices collapse. It's basic economics. Brutal, but basic. Right now, there's a complete standoff between buyers and sellers. Nobody's moving. Buyers know prices are going to fall, so they're waiting. Why buy today when you can buy cheaper tomorrow? Sellers know they need to get out, but they're paralyzed. They're hoping, praying the market stabilizes, that somehow things will magically improve. But hope isn't a strategy, and prayer doesn't pay mortgages. Everybody knows what's coming. They feel it. The tension is suffocating. It's like watching two armies stare at each other across a battlefield, both knowing the fighting is inevitable, but neither wanting to make the first move. The housing market has been the cornerstone of middle-class wealth in America for generations. It's how families built security. It's how they planned retirement. It's how they passed something meaningful to their children. Watch it crumble. But here's what makes this different from 2008. Back then, the problem was subprime mortgages, bad loans, financial weapons of mass destruction hidden in complex derivatives. At least there was something specific to point at, something to blame, something to fix. This time, the problem is everywhere. It's in the job market. It's in consumer debt. It's in commercial real estate. It's in the fact that an entire generation can't afford to buy homes in the first place. The foundation itself is rotten. Young people aren't buying houses. They can't. Student loan debt, credit card debt, wages that haven't kept pace with inflation for decades. They're locked out of the market completely. And then without new buyers entering the system, the entire structure becomes unsustainable. Older homeowners are trapped too. They bought at the peak. They refinanced multiple times. They used their homes like ATM machines during the good years. Now they're underwater or barely breaking even. They can't sell without taking massive losses. It's a trap closing from both sides. The American dream of home ownership, it's turning into the American nightmare. And unlike nightmares, you can't just wake up from this one. This is real. This is happening. This is now. But wait, there's something even stranger occurring in the markets. Something that almost nobody's paying attention to. A metal that's been ignored for years is suddenly outperforming everything. Let's talk about silver. There's a secret hiding in plain sight. A metal that everyone dismisses. A market that financial advisors barely mention. And it just did something that's only happened once before in recorded history. Silver. Yes, silver. Gold's forgotten little brother. The metal that gets pushed to the corner while everyone obsesses over gold bars and stock portfolios. That's silver. In 2025, silver didn't just perform well. It didn't just beat expectations. It absolutely destroyed the competition in a way that defies logical explanation. Silver outperformed the S&P 500 by 132%. 132%. Stop and think about that number for a moment. An industrial metal, used in electronics, solar panels, and medical equipment, beat the entire American stock market by margins that seem impossible. This is the second largest performance gap in recorded history. The second time ever that silver has dominated this violently, and the first time it happened, economic chaos followed shortly after. Now, yes, silver might be overvalued in the short term. There could be a correction coming. Prices might pull back temporarily. But the long-term models, the sophisticated algorithms that institutional investors use, they're pointing to something extraordinary. $375 per ounce. That's the projection. That's where the smart money believes silver is heading. But why? What's driving this insane movement? Here's what the data confirms. There's a massive rotation happening right now. Capital, real money, is flooding out of stocks. It's flooding out of bonds. It's abandoning anything that's just paper promises and digital entries in a database. Where is it going? Into commodities, into real things, into assets you can physically touch and hold. The financial world is being turned completely upside down. Everything investors were taught for the last 40 years, it's being exposed as fantasy. And speaking of fantasy, let's destroy an illusion that keeps millions of people trapped in a broken system. The S&P 500, the pride of American capitalism, the index that every retirement account is tied to, the benchmark that financial news celebrates every single day when it hits new highs, record highs. They keep shouting. All-time records. Aren't we amazing? But here's what they're not telling you. Here's the dirty secret hidden behind those celebration headlines. Measure the S&P 500 against gold. Measure it in real money, not inflated fiat currency. Measure it in terms of actual purchasing power instead of meaningless paper numbers. It's down almost 50% over the past 45 years. 50%. Worst performance relative to gold in nearly half a century. Let that sink in deeply. Your stock portfolio might show bigger numbers on the screen. Your account balance might look impressive. But in terms of real wealth, in terms of what those dollars can actually buy, you've lost half your value. The myth of infinite stock market growth is being exposed as exactly that. A myth. A carefully constructed narrative designed to keep money flowing into a system that benefits the few at the expense of the many. The smart money knows this already. The institutional players who move billions of dollars with a single phone call, they've been quietly exiting for months, selling into strength, distributing their positions while retail investors keep buying the dip. 2026 might be the year the bubble finally pops in a way that everyone can see. Not just the people paying attention, not just the analysts reading between the lines, everyone. Because you can only prop up asset prices with cheap money and stock buybacks for so long. You can only manipulate markets with central bank intervention for so many years. Eventually, reality intrudes. And reality doesn't care about your feelings or your portfolio balance. Reality is not looking friendly right now. The mechanisms that held everything together for decades, they're breaking down. The trust is evaporating. The confidence is cracking. People are starting to ask dangerous questions. Why are stocks at all-time highs when the economy feels terrible? Why are corporate earnings strong when regular people can't afford groceries? Why does everything feel so disconnected from actual reality? Those questions lead to uncomfortable truths, and those truths lead to panic, and panic leads to collapse. But there's one more piece to this puzzle, one more asset that was supposed to save us all. The rebellion against central banking, the future of money itself. Bitcoin is failing. Digital gold, the hedge against inflation, the future of money, the revolution that would destroy central banking forever. That's what they promised about Bitcoin. That's what believers chanted like a religious mantra for over a decade. The narrative was beautiful, seductive, powerful. No more government control, no more currency manipulation, no more Federal Reserve printing money into oblivion, just pure, decentralized mathematical freedom. But something unprecedented just happened. Something that's never occurred in Bitcoin's entire existence. For the first time ever, Bitcoin closed 2 consecutive years with negative returns. 2 years in a row, back-to-back losses. That's never happened before. Not once. Not during any previous bear market. Not during any regulatory crackdown. Not during any technological crisis. The dream of digital gold just shattered into a million pieces. Analysts are now putting Bitcoin on their avoid list for 2026, right alongside oil, right alongside traditional stocks, the assets to stay away from, the investments that will destroy wealth instead of building it. The crypto market is losing its status as a safe haven asset. That special designation, the promise of protection during economic chaos, it's evaporating like morning fog under harsh sunlight. The big institutional players, they're walking away, quietly, professionally, without announcing their exits. They're just gone. Bitcoin was supposed to be the rebellion, the weapon against fiat currency manipulation, the tool that would free humanity from central banking tyranny. Instead, it's proving to be just as vulnerable, maybe even more vulnerable, to the same economic forces crushing everything else. The narrative is broken, completely shattered. And narratives, once broken, rarely recover. So let's pull everything together now. Let's see the complete picture. Gold is screaming danger at volumes we haven't heard in nearly 50 years. Real estate is frozen solid, about to crack and collapse under its own weight. Silver is exposing the stock market's fundamental weakness with performance gaps that defy explanation. The S&P 500 is collapsing in real terms despite record nominal highs. And Bitcoin, the great hope, is failing its biggest test. These aren't isolated events. These aren't random coincidences. These aren't temporary setbacks that will fix themselves. This is a system-wide transformation. This is structural collapse in slow motion. We're watching the architecture of the post-World War II financial order crack under its own weight. The instruments that central banks relied on for decades, they're not working anymore. The playbook is obsolete. The toolkit is empty. The wealth people thought they had, much of it exists only on computer screens. Only in the collective agreement to pretend certain numbers mean certain things. Only in the shared delusion that paper can substitute for reality. And that agreement, that collective belief, it's fracturing. Slowly at first, and suddenly, then catastrophically. Here's what needs to be understood clearly. This isn't about doom and gloom. This isn't about spreading fear for entertainment. This is about reality finally catching up with fantasy. For years, decades even, we've been told everything is fine. Just keep buying stocks. Just trust the Federal Reserve. Just believe the unemployment numbers and inflation statistics. Just have faith in the system. But the gold market is telling a completely different story. The housing market is telling a different story. The commodity markets are screaming warnings that contradict every official narrative. They're telling us that massive stress is building in the system, pressure that can't be contained much longer. They're telling us that the bill for decades of easy money and financial engineering is about to arrive in full. And nobody, not the Fed, not the Treasury Department, not Wall Street executives, nobody has a good plan for what comes next. The tools are exhausted, the credibility is gone, the trust has evaporated. We're in uncharted territory now. What happens when a system built on debt and confidence loses both simultaneously? We're about to find out. The indicators are flashing red. The warnings are everywhere. The question isn't whether something catastrophic is coming. The question is whether anyone will be prepared when it arrives. The storm is building. The pressure is mounting. The cracks are spreading. And time is running out.